Hmm. So,
Good afternoon. Am I audible?
uh,
Yes, Tana, you are audible. Now you are host.
Great. Thank you.
Okay, I just
yes, yes, yes. Hmm. Okay. So just do a one thing now. I will generate like just complete this task and till Sunday. Then we will issue a certificate of 2 months of successful internship because we are like a there is some lacking or there is some distraction in mid of like April. So if you are comfortable, then we will like provide you certificate for 2 months of internship. And like we will take a break. I will guide you one day by day. If you need any support from mine, then I will. And if we require any support of you, like if we require some project, if we had some project now, if we require some volunteer, I will prefer you most. Like I will contact you and you can come and join us. Like in because you are in, I think you are in a second year. You went in a third year, then you had a less. Yes, so you had time to like learn a lot in that domain. By which after graduating we had certain skills. So if you are going for master, like if you are going for master degree from outside like anywhere, that's perfectly very good. If you want to join us, then we will definitely pursue you as a first priority. Okay. So so that is like from our side by which you can get more na? And do you have LinkedIn profile? Okay, so how many followers do you have in it? Yes. Okay. Good, good. So do a one thing na. So I will also suggest you na ki like build because there is another company I would like to register. I would like to run like
So, any updates on Mr. Vishwanathan? Should I just message him? Ganesh sir, have you joined? Ganesh sir, good evening. Have you joined?
Good afternoon.
So, good evening.
Good evening, Tina.
Yes, sir. So, Ganesh sir, with your permission, could we begin?
Sure.
Right, sir. So I'm Taina Majid here from Metis Startup Hub, and we offer a heartfelt gratitude to DFAN or Digital Futurist Angel Network for their support and cooperation solicited today. Our webinar for today is for our startup community with the agenda investment opportunities for startups. DFAN is a community-backed angel network committed to improving mentoring and support for the startup community. Our speaker for today is Mr. Ganesh.
Maybe we can all mute ourselves.
And if anyone wishes to see the you can give it and coming to the English
Thank you.
which is really very fast.
I'd appreciate if you mute yourself.
Robotic deployment in Indian farming community. Frankly, we see a very strong country. And several data-oriented researchers have made their way to the farm at home in India and adaptation of robotic automation-oriented solutions.
Going forward, please mute yourself, everyone, and I'd like to proceed, please.
While these robotics, these are very, very useful because they reduce the drudgery at the farmer's level, but whether
Hi, Tanya, this is Nirmesh. I think so you have an option to mute all. In your settings, you can mute all.
our language are very, very less.
That's correct. I'm trying. For some reason, I'm not able to. That is why I raised the request. I'm just trying to do it again, sir.
Please.
Let's go to the participants panel. And you have the option right out there.
என்ன மேம் இது? இல்ல அந்த நான் தேடிட்டு இருக்கேன். ஒரிஜினல் மெயிலும் காணோம், உங்க செந்தன மெயிலும் காணோம். டெலிட் பண்ணிட்டீங்களா மேம்? சென்ட் பண்ணும்போது இப்படி இந்த மாதிரி எனக்கு இப்படி தள்ளினா டெலிட் ஆயிடும். அந்த மாதிரி ஏதாவது அச்சுல பாருங்க. நீங்க இப்படி இழுத்துருக்கீங்க, இந்த டெலிட் ஆயிருக்கு. சரி, இதை வந்து இது பண்ணுங்க, டெலிட்டை வந்து ரீப்ளேஸ் பண்ணுங்க. ஸோ மூவ் டு இப்போ உங்களுக்கு டெலிட் ஆயிருக்கு. டெலிட் இப்படி இழுத்துருக்கீங்க, இப்படி இழுத்துருக்கீங்க, அது டெலிட் ஆயிருக்கு.
I'm just noticing probably just two of one Ganpati has to mute himself. I think rest have all muted.
Sorry, sir. Sorry.
And I think, yeah, that's right.
Thank you, sir. Appreciate it. I'm just trying it at my end. So with your permission, can I begin?
Sure.
So starting again, our topic for today is investment opportunities for startups, and my honor to introduce our speaker for today, Mr. Ganesh Viswanathan, Senior Vice President, ATN Technologies, with expertise in IT, analytics, cybersecurity, and project management. Over to you, sir.
Okay, thanks a lot, Taina, for the introduction. So today's session is going to be pretty interactive. And I would like to discuss with you about what are the startup opportunities and how we can leverage the entire ecosystem, which is currently very, very positive. Post the COVID, you are seeing a lot of talk about startups, and everywhere the focus is on improving the economy from a startup. So how we are going to do that? And what are the aspects relating to the startup investments, and basically what are the areas, what are the thrust areas as far as startups are concerned. We can talk about all this. So one thing which I would like to tell you is that recently there was a very wonderful report that was published a few days ago by basically by Mr. Pai and Mohandas Pai from 314 Capital. And he says that we are going to go into a 10 trillion economy from the startups. As you are aware, currently there are about 55,000 startups, and we are the third largest startup ecosystem in the world, with about US $315 billion in value. And what we are looking at is we also have about 58 unicorns amongst us, which is a matter of great pride. And in the next 3 to 4 years, by 2025, we are going to have from 55,000, we are going to go to 100K startups, about almost double the number of startups. And we are going to have about 150 unicorns in the next 4 years. So from 58, we are almost tripling to 150. And overall value would be about 1 trillion, almost 3.5 times from the current value. So there is so much of potential that is there from the startups. So, and if you look at even in 2021, you would know that the funding that has happened in startups has gone on a major positive side. It has gone up substantially in the first 6 months itself. And be it edutech, be it fintech, be it food tech, and health tech. These 4 areas, you're finding rapid traction that is happening. So I would like to talk briefly about why the traction is happening in these 4 areas. And then from a startup perspective, I would like to discuss with you guys what is important in a startup. And is it the team, or is it the funding, or is it the idea? We are going to discuss that also briefly. And towards the end, we will have a few question and answers. So will that be fine? Okay. So coming to the pandemic that we had, and the digitization that got started in a very big way in 2016-17. Now, post the pandemic, you would know that there has been a lot of thrust. People are getting on to online. And if you look at schools per se, the number of schools that we have currently in India is about 1.5 million. And out of the 1.5 million schools, hardly 20,000 are digitized. So it's a small percentage, which is, I would say it's less than even 10%, which is digitized. So huge opportunity is there for digitizing the schools and offering them curriculum. Now, last year, because the schools were closed, schools, colleges, there was a lot of focus on K-12, basically educating the students on various aspects of the school syllabus. We had a lot of these startups from the Byju's and Vedantas. They focused. Topper is another one which was focusing on the K-12 education. So it was focusing on the K-12 education. But now the focus is upskilling. How do you improve the skills of the people? It could be job-related skills. It could be probably something wherein you want to improve the soft skills. And soft skills could be on probably on leadership, could be on communication, could be on managing the teams. So we are finding a lot of focus on upskilling, could be on job related or even the soft skills. So I would say that as far as EduTech is concerned, where we are leveraging technology to provide better skill, educating the masses, there is going to be a major push, major thrust. And what we feel is that the EduTech market itself is going to go in leaps and bounds, and by 2030 is going to almost touch about 10 trillion. So that is one area which there is no shortfall of startups, and still there is potential. The potential is huge. When we talked about, I said 1.5 million schools are there with hardly about less than about 20,000 which are digitized. So that's just about a few percent. Less than 10% could be about 1.5 to 2%. So we need to focus upon the right area for EduTech also. Recently, we found a lot of startups getting focused on software, coaching, on coding, for example, that has now taken a major upturn. There could be newer areas also where people are interested in learning certain new aspects, and it can learn. It can go from AI. It can go to space technology, blockchain, you name it. We have the course curriculum, and you have to be innovative in this, and first mover advantage will definitely be beneficial. So don't go into areas which is already cluttered with a lot of competition. I would call it as red ocean. Let's please focus on the blue ocean. EduTech may be probably currently moving from blue to red, but there are certain niche areas where you can focus upon and improve that and create a major impact. The second area is health tech, and health tech, why it is important. And we are all hooked on to our WhatsApp messages for improving our immunity, improving our mental health, improving our physique. We are getting on into various channels, courses to improve the overall health. So healthcare is definitely is supposed to grow in a very, very rapid manner. And currently, India has got more than about 5,000 healthcare startups. And the growth is CAGR, if you look at it, it is over 39%. So that's an amazing growth in healthcare startups. And by 2023, it's going to grow to 5 billion. And the potential is a humongous opportunities there in healthcare and health tech. And by 2000, another 12 years, 10 to 12 years, it is going to grow 10 times from that figure, probably reach about 50 billion. So we have seen opportunities in telemedicine, opportunities in fitness, e-pharmacy, and we have just now seen a few days back about a startup which got started 4 years back. PharmAC has taken over a veteran in this field, which is 30-year-old, Thyrocare. So people, the startups in this field are doing backward integration, forward integration, and they are digitizing at a rapid pace. They are providing better services, and there is a huge demand for health tech startups. So I would say that that is another area wherein you can use leverage IT, you can use AI, you can use blockchain, you can offer various SaaS services. So that is definitely on the upswing. And I think post-pandemic, this is one area which is already something which even the various investors are focusing upon, and you would get a lot of IPOs also in this field in the near future, because now the startups which are getting mature are now sourcing funds from the public, from the Indian shareholders, and there are IPOs being launched by the startups. And so Paytm is planning something. You would be aware about Zomato, another which is currently being which was about worth about 5.5 billion, is now looking at a much higher valuation in 2 digits. So they are all raising an IPO. So there is a huge potential there in health tech also. And the third area which I wanted to talk about is on food and agri-tech, because it is related to being us being more health conscious. And we wanted to, for example, we wanted to focus upon not going to the restaurants because the restaurants are closed, whether we can have community kitchens, for example. Cloud kitchens are now the talk of the town, and basically delivering healthy food at our doorsteps. And we are talking about there is a lot of startups which have which focused on delivery. You are aware about the Zomatos and Swiggies, but now they are the people have got more health conscious. So how to go about building a healthy kitchen, and the cloud kitchens are also started. I want to have a Bengali dish or a specific Gujarati dish or a Marathi dish, or probably a special dosa. So we can order it, and healthy food supplements have also taken an upswing. So I would say that food tech has undergone a transformation, and related to that, growing the food, organic food, that is also something which is going at a rapid clip. You'd have seen during COVID, people were trying for a lot of Ayurvedic items to boost the immunity, starting from the methis and haldis, the turmerics, and various type of those pulses which are supposed to boost the immunity. And so I would say that that is another area which is on an upswing, and definitely you should look at this area also. So take a particular domain, instead of just saying I'm going to work upon AI or blockchain. Take an area and try to do something very, very unique about it. So that is most important. And I would here give something which one of the recent study which was done, where when one of the top investors who has invested in more than 100 startups, and he has also mentored, incubated several startups, and basically his name is Bill Gross, and I would like to quote what he said. And he was trying to evaluate what makes the startups tick, what actually matters finally as far as the startup world is concerned, how to create a successful startup. So he did a research, he and his team did a research, and he looked at various aspects of about 100 startups. It had a combo of somewhere very successful, roaring success, probably 100x, 200x return. Some he lost the money. So he tried to analyze the startups on the basis of various factors. What are those factors? The first one that he talked is the idea unique? He thought that idea is very important. So that is also one of the factors, because without a proper idea, without the ideation in place, because the startups would fail. So you should have a very unique idea, and basically that idea should not have been copied, or basically it's an idea which is very, very important. So he thought that that is one important factor. The second thing which he thought is, okay, idea is there, but the team is also important. So the founder quality is important. Who are the members of the founder team? Do they have prior experience in startups? How are they gelling with each other? How is their adaptability? Do they have very firm views, or they are flexible? So next is the team. Next, point that he taught us, another factor that he said is, okay, I will also look at what is the business model? How am I going to make money? So that is also another important aspect, how you're going to monetize your idea, how does the business model work? So we thought that is also another factor. And the fourth factor is the startup should have got funding. Without funding, you cannot progress. We have very few startups like Zoho, which are self-funded, but many of the modern, the current startups require huge funds to scale up. After the initial bootstrapping, which they do with their friends and families and their own money. Guys, can we mute ourselves? Guys, can we mute ourselves? Okay, thank you. So funding is also very important. And also he said there's another thing, which is timing. Basically, it should have the time also, the environment, everything should be congenial for the startup to grow. Okay, now basically, if it is ahead of time, then we say that it's too early and probably it is not the right time. And if it gets pretty late, so there is too much of competition, it becomes a red ocean. So timeliness is also important. So he said that is also a very important factor. So he looked at these 5 factors, and then he analyzed these startups, and he focused on the top 5 which give extraordinary returns, and the bottom of the heap, the ones which where he lost all the money. So the analysis throws up something important. The timing is most important, and 42% of the success of the startup is dependent on timing. The next one is the team, which is 32%. Idea is just about 28%. The model and funding are 4 and 5. So I would say to all the budding entrepreneurs that whatever idea you choose, please consider the fact whether it is relevant to the current timings, whether due to environment or due to regulation or due to any other factor, there is going to be a boom. EduTech boom happened because of the rapid internet penetration. From 20%, we have galloped to over 50%. The mobile penetration is more than 90% now, which was in single digit 15 years back. So, and the cost of data, we are one of the lowest among all the countries. So probably we are about $0.2 per GB, and US could be about $1 per GB. Even Russia, China are ahead of us. So our data cost is very cheap. So that is also another one, another facilitator for the momentum that has been built in startups to go digital. So what I'm saying is, look at something very, very unique. It can be even in a topic like space tech. And recently we evaluated some startup which is trying to solve the problems of boulders present in space, which might damage the satellites. So there was this startup which breaks these stones and make sure that the satellites which are being launched are not damaged. What an amazing idea. And a bunch of innovative I would say, young entrepreneurs with bubbling energy have touched upon this. People are working on robotics also in India, and amazing work is happening in that field. So what I would like to say here is that whatever you choose, make sure that you have an idea which is at the right time. You have a team, you have assembled the team, and then you build a product. Now, another point is, when we are building the product, is it that we should build the product, we should wait till we build the product? Or the best thing would be you build 50% of the product and then take it to your friends, take it to your some of the known customers and seek feedback. If you are going to take the product after it is completely built and the market doesn't take it, then all the effort goes for a naught. So it is better you evaluate, you try to find out whether the product that you're building is of any use at all to the customer. Validate it on a continual basis. And initially, it is not that you should blame lack of resources. I would say that what is most important is not lack of resources, but lack of resourcefulness. Even if you have no money, try to build something and start your selling. And I don't have money, so I can't sell. I don't have money, so I can't develop the product. I don't have money, I can't take it to the market. Now, instead of that, try to listen to the voice of the customer and slowly improve the things. Our investors also choose such people who are of the entrepreneurial zeal, who have that zeal, who have that enthu, who are able to work with minimum resources, get their product validated. And once they see such people, they are ready to put all the money for such people, because they feel that these guys will go places. So with this, I would now open the board for discussions. Any queries, any questions?
Yes, the floor is open for Q&A. Everybody, please feel free.
Yeah.
Tanya, I have a question, and everyone's permission if I can go first.
Yes, please.
So thank you, sir, for these very fruitful insights. In fact, one of the key takeaways, I think, for me during this discussion was that the 50% prototype makes a lot of sense, because that's a very important point. And I think, I mean, I'm going to take that away from this discussion. Thank you so much. I wanted to understand what is, I mean, if for seed funding, and this is assuming that the startup has been bootstrapped by the entrepreneur using friends and family, and we have a working prototype. How do you suggest we approach investors for seed funding? And this is because I understand that the higher level VCs and the equity funds will come only beyond at a much later stage, because I myself work in a private equity firm. So we wouldn't assess products which do not have at least 3 or 4 seed funders endorsing it, and successful seed funders for that matter.
Yes.
But I mean, I would want you to just elaborate for us on
Sure.
How do we cover your seed funding apart from the
Yeah,
incubation?
seed funding. Yeah, that is actually after the friends and family round. Some people go for a pre-seed round, or it's a seed round. So basically, when you are approaching the investors, you should be basically having a clarity on what is the business problem that you're solving. Okay, and once you define the problem, and then you say, this is the solution that I'm planning. Okay,
Sure.
so a very structured approach is what is required, and you have to do all your study homework to arrive at a proper we call it as a pitch deck,
Yes.
wherein
Yes.
we put in all these things. What is the
Absolutely.
problem that I'm solving, and how am I solving this
Yes.
problem? Then we look at what is the total size of the market, total overall size of the market, and then what is the addressable market that I'm looking at, and out of that addressable market, what is that I'm doing servicing. So probably it's a small pie of it, probably 10% of the total market. So you should be able to put the numbers to it, and also refer to some literature about how the growth is there in this particular market. You should also be clear about who are your competitors, and how your product is going to be different from the rest of the products. The clarity on that should be very much there. The next thing is, of course, the founders, because the founding team is very, very important. Whether it is a single man team, or if are there a 2-member team or a 3-member team, all this is important. And how is the division of responsibility? Are they complementing each other, or both of them are of the technology side, and there's no one from the marketing, is actually a negative mark. So you should have the strengths of the founders complementing each other. So you should have somebody who's in marketing, another guy who's in technology, and the third guy is in finance. So such a combo would be better. And also the type of advisors that you have, because a tech startup would be requiring some veterans. So getting on board some veterans who will be able to guide you, who will be able to mentor you. Some of the startups I've seen, they are going through the incubation route or the accelerator route. Accelerator basically to scale up, and incubator the initial when we are building the product. So you have to decide, are you going to go solo, or are you going to go through the incubation route? So, and then you have to also look at a very important aspect, how do you value yourself in terms of what is the value that you bring to the table, basically in terms of the POCs that you have done. If you have taken it to a client, basically, yeah, is there some revenue that is coming up, or if it is at the pre-revenue stage? Yeah, guys, can we make ourselves mute? Yeah, I think. Okay, so basically we should be clear about at what stage we are in, and accordingly we have to look at the complete picture in terms of whether the POC has been done, or whether there is some initial traction that has happened. Investors normally look for some traction because ultimately business means money, and you have to generate some money. So that is also another thing. And with all this, definitely you'll come to the pre-money valuation of the startup, at what valuation and how much funds you're ready to give. I already see a hand being raised by Nirmesh. does it answer your question?
So thank you for this detailed reply. So actually what I was looking for was what is the process to scout for investors who would be interested in? So should we just like contact them? Is there some platform where they are available?
You can approach us. For example, you can approach DFAN. We are funding a lot of, we are doing seed funding, and you can approach DFAN, and we can have it, have your startup evaluated, and we do a very detailed evaluation. And by chance, if you're not getting funded by us because it doesn't fit into our investment philosophy, then we will direct you to the right angel networks or investors who may be willing to look at you. We have tie-ups with several other angels and micro VCs who will be willing to look at your startup. So our objective, DFAN, is to help the startups grow. We are not interested in making money. Money is just a secondary thing. Our aim is that startups in India should look up to DFAN for growing their startups, for mentoring their startups, and for scaling the startups.
Very well said, sir.
Got it, sir. So thank you so much. I shall certainly write to DFAN in that case. Thank you so much. This is very helpful.
So Ganesh sir, we have two queries from Mr. Praveen Kapoor, and I'll request you to quickly take them up. So first would be that how would you suggest startups should give equity to investors, open to give equity to investors?
Okay, so the most important thing that I would like to state here is that the equity is a very, very important bargaining chip with the investors, with the startups, with the founders. So when you are trying to give an equity, never give more than 10 to 15%. 15% is on the higher side. In fact, anything below 10% is good enough. And because as you scale up, you would be requiring multiple rounds of funding to scale your startup. Already in the initial family round, you might have given some, say, probably 5 to 10% to your the investors. So as you get in investors, so at each stage, if you're diluting, as you grow and go to the seed round and then the pre-series A and series A, if you don't have at least 60 to 70% ownership of the company, then you will not be able to have that bargaining power. And I would suggest that in the initial rounds, try to be a bit conservative as far as the percentage that you can issue equity to investor, probably 5 to 10%. And as you grow, after 3-4 rounds, in any case, the equity would have got diluted by 25 to 30%. So it would get diluted in phases, rather than if you're going to give, say, 40% to some investor in the beginning itself, then it may not be advantageous to you in the long run.
Right, sir. Yes, sir. Yes, sir. Thank you, sir. Sir, one last thing, that is the last question we are taking for today. That is it true that business incubators do not guarantee that startups will be funded?
Basically, I would say that business incubator does not guarantee. See, ultimately, it's going to be a win-win. If startups are funded, then the incubator also is getting benefited. But I would say that we should be ready for some startups not getting funded. It's very much there, because not every startup we are aware about. Out of 100 startups that are getting started, 90% fall by the way. So only 10 reach various stages, and probably 1 or 2 or 2 or 3 are able to get that 100x to 200x valuation. So we should be ready for some startups not getting funded. It is very much possible. It depends on the progress that is being made at the time of incubation, how they are able to convert the idea into a solution which is lapped up by the market.
Right, sir. Right, sir. Thank you. Thank you for this clarity, sir. So I think this would be the
Okay.
last because we're running out of
I
time.
have one question.
I would
Tanya.
request
ask one
the
question?
audience. Yes, could you leave this in the chat box, please? And DFAN
Yeah, I
and
will be
MSH
able
would
to.
revert
I will be
you.
able to answer that separately.
Yes,
Sure,
please.
sounds
Everybody has a commitment.
Thank you. No, my
Yeah,
hand was paining. I just thought to speak in between.
So sorry about that.
No
We would
worries.
definitely revert to you, sir. Please do leave in your queries in the chat box and on our email IDs.
Sure, sounds good. I'll do
Okay,
that.
thank you. Yeah.
So I thank DFAN. I thank Mr. Vikram Gupta. I thank Mr. Ganesh Vishwanathan. Thank you, sir, for your valuable time and session today. Thank the audience for joining in.
Thank
And
you
this it
all.
was- Thank you, everybody. Before I sign out, please don't forget to follow MSH on all our social media handles. I sign off with our motto: innovate, connect, collaborate. Let's make technology transform and integrate. Thank you, everyone. Have a good day and a wonderful weekend.